Sir, Regional Council Member to this webinar. Also welcome today's faculty, Csr Sandeep Das, and I welcome Tirupati Branch Chairman, CAP Sudarshan. So we'll start the VCM with our ICI motto song.
Sutteshu Jagrati Yaesha Sutteshu Jagrati
Kamam kamam purusha nirvivanaha tadeva shukram tadbrahma tadevamrutam tasmin lokaha Yadadvaita
Thank you. Now I request our Nellore Branch CAI Krishna sir to give his inaugural speech.
On behalf of the Managing Committee of Nellore and Tirupati Branch of SARC of ICI, good evening and a warm welcome to all the members of both the branches for today's webinar on CARO Report 2020. At the outset, I would like to thank and also welcome our chief guest, our Central Council member MP Vijay Kumar Garu. Our chief guest will be joining us a little late, around 6:30, due to his other webinar at the same time, for which he is the faculty. So I request the members to please pardon for this small delay. And I also am very thankful for our chief faculty Sandeep Das Garu, in spite of his busy schedule, has accepted our invitation and participated in our today's webinar. I would also welcome our Regional Council member Chinnamastane Garu for today's webinar. The MCA has issued the company's audit report CARO 2020 on 25th February 2020. This order has been issued in suppression of company's order CARO 2016 and is applicable for reporting on financial statements of companies whose financial year commences on or after 1st April 2019. CARO 2016 was issued by MCA in suppression of 2015. Section 143, subsection 11 of the Act stipulates that the central government may order for the inclusion of statements on specified matters in the auditor's report for specified class or description of companies. Accordingly, CARO 2020 is issued in pursuance of Section 143, subsection 11 of Companies Act 2013 for inclusion of matters specified therein auditor's report. Hence, CARO 2020 should be by the statutory authorities, auditors of every company on which it applies. CARO 2020 has been issued after consultation with the National Financial Reporting Authority constituted under the Section 132 of Companies Act 2013. Now, the MCA has kept the applicability of CARO 2020 to companies same as CARO 2016. The CARO 2020 will not apply to auditor's report on consolidated financial statements except for some classes. The total number of classes in the new CARO is 21. The CARO 2020 has enhanced the auditor's reporting requirements in certain areas such as loans given, applicability of short-term funds, long-term funds, etc. With this, I would like our branch secretary Arun Kumar Garu to take over the proceedings. Thank you.
Thank you, sir. Thank you very much. And I request Tirupati Branch Chairman CLP Sudarshan sir to give his opening remarks.
Namo Venkatesaya. Today's chief guest, our Central Council member, the MP Vijay Kumar sir. You will join before end of the virtual meeting, since he occupied some important meeting somewhere. And guest of honor, first SARC secretary, present exceptional member of Nellore branch, and present SARC member Chennamasthan Garu. Today's speaker, eminent speaker, CA Sandeep Das from Calcutta. He is an eminent speaker on Companies Act, Nellore branch committee members, Tirupati branch committee members, members of Tirupati and Nellore branch, and other participants. Welcome you. Good evening. Today the topic is very important topic. It is very important for the coming days to practice. So members, please continue to be in participation in this meeting until end of the meeting and enrich the knowledge from our speaker. In future, we have plans to organize some more CP virtual meetings by our Tirupati branch and Nellore branch in the coming months. We have plans to organize some specific topics as advised by our members, the cooperation of both the branches, members of the branches. I pray Lord Venkateswara to give good health, wealth, and prosperous to our members during this COVID pandemic. I request our secretary, Nellore branch secretary, to continue the proceedings. Thank you, sir.
Thank you very much, sir.
Okay.
Thank you. Honored CAT Chennamasthan sir to give his opening remarks.
Thank you, Chairman of Nellore branch and Tirupati branch, and the Secretary of Nellore branch. I think my voice is clear.
Yes, sir.
Somebody can clarify. Yes, thank you.
Clear.
And today's chief guest and the Central Council member from Chennai, our well-known person, and most of them we got the knowledge under him as a guru, MP Vijay Kumar Garu, who will join the valedictory as a valedictory after 6:30 as a chief guest, and chairman of both the branches and office bearers of both the branch and the MC members and past chairmen of Tirupati and Nellore branch, and my friends, both the places in Nellore as well as the Tirupati, and the speaker Sandeep Das from Kolkata, my dear members and senior members who joined for this virtual webinar on CARO 2020. I welcome you all and good evening to one and all. Dear members, everybody knows the Tirupati branch chairman has expressed I am ex-officio of the Nellore branch.
Yeah.
So now I am part of the Nellore. The recently one program the JV sir has expressed recently last 1 month back when the one program on disciplinary proceedings, I think. Ethics, code of ethics. So at Nellore branch, the JV sir has told that I am at now belongs to Ongole. After district bifurcation, I becomes the Nellore district person. So the same pattern will applicable to me also. After bifurcation, I will become the Tirupati district person, not the Nellore. So I hope I will be the both the Nellore as well as the Tirupati person, not the only for the Nellore. So I will be becomes the Tirupati also. My home branch. I can say that I studied in Tirupati only, the degree. So thank you one and all. And dear members, this is the one program which needs really appreciate organized by these two branches as the Nellore and Tirupati. It would benefit the members both the branches. Having completed the bank audits, again we are waiting for the MEF application for the next audit. We come to the stage of audit of the companies, which is again the time-bound activity. Coming to the today program CARO 2020, one important report which has been undergone changes after I think more than 4 years from now. it is announced by the MCA after consultation with the NEFRA. I believe always going by one checklist kind of activity by statutory auditor, which would definitely easy his job of expressing the opinion on the financials, which is the part of the attestation functions of the various companies at the different levels. Though the CARO 2020 applies to certain companies based on their share capital criteria and turnover criteria, it is always my suggestion for each one of us to go through this report once before signing any company audit report, because that's if you involve that various disciplinary proceeding at the institute level, most of the covering this CARO compliance only. So we are not fall under this compliance part. We have here the Sandeep Das who will take through this CARO 20 in detail to update our members about the recent changes. It will definitely benefit all the members who are the participant here. And coming to this, my updates from on behalf of the institute, there is a just inaugural session also we discussed in the before the technical session involved. The chairman, other MC members and the Tirupati branch chairman also requested that updates in the MEF. I also shared in the different platforms, that's MEF updates. But the coming to the MEF 2020-21 still yet to be hosted because there is a discussion going on between our institute and the RBI. I want to explain that the condition, especially the condition is applicable for category 4. So most of them, as we are from Nellore and Tirupati, most of our practice comes under our firm category comes under category 4. So if you see that in the RBI notification, there is 4 categories, category 1, 2, 3 and 4. So all these categories as notified, the conditions notified by the RBI in 2016 and 17. These conditions is implementing and drafted in the MEF application. But category 4, one condition is not included in the MEF application. That condition is if any proprietary concern having as a sole practice or individual practice or as a proprietor, along with this any one occupation, he must have one paid CA. Then only the proprietor or individual practitioner or sole practitioner can eligible category 4. This is the condition is existing from the last 4 years, but institute somehow is not implemented that condition. Now the question has arisen between the institute and the RBI. RBI specifically given the direction to the institute, especially PDC committee. I am also part of that. You put this condition in MEF software itself, so that at the category allotment, the MEF application is giving after submission of application. At that time, initial itself, you should implement. Now the institute is not a position to implement this condition because now we are applying this MEF application based on the status as on 31st December 2019. So institute would have not informed to any proprietary concern before December 2019. So now is the responsibility or that difficulty to implement is in the hands of the institute, not the category 4 persons or the proprietary concerns. But still it is going on, but RBI has not given that confirmation. Unless the RBI will give the confirmation, then only MEF application will be hosted. But coming to this next year, suppose next year at the same time we are supposed to apply the 21-22 application next year. For this, institute is likely to be guide or institute is likely to be use the direction to all the category forms. At least December 20, you must have that paid CA to avoid that 22 bank audits. So that condition will definitely will come. I request all the individual practitioners and the proprietors and the sole practitioners to see this. The solution as of now is available. You convert the existing proprietorship into partnership, subject to your firm at least for a 5 years standing. Then only you can do, or you can join some other firm as a partner. That is only one option. Or you can take that as a direct by institute as a paid CA. But my suggestion is up to October, don't do this all the changes. You do that after 1st November before December 2020 only. If you do the now, again is the issue will come, because 31st December 2019 database and 31st October 20, the same data should be matched for the empanelment to 21 March bank audit. So it will be a different, it will be a deviation. So that don't change that up to October, you change that after 1st November only. And coming to the individual practitioners who passed the CA 1980 or 1990 or 2000, who whatever, they're still practicing in the individual name. But my suggestion to all these individual practitioners, you immediately update sole practice. If you update sole practice, it looks like having trade name. So then you are eligible to take at least one paid CA. If you having still as an individual practitioner, it's very difficult to take as a paid CA. You must immediately update the sole practice, sole practitioner, instead of if you don't want to take the Unco and associates. That is my suggestions to all of you. If anything issues on this, you will feel free to call at any time. I will give the best suggestion on this. Thank you one and all for giving this opportunity, and stay home, stay safe. Thank you. Thank you for both the branch, both the members and the speaker especially. Thank you.
Thank you. Thank you, sir.
Thank you, sir. Arun, are you there? Sir, maybe. Yeah, okay.
Thank you very much, sir. Now I request our branch treasurer, CA Lakshmi Prasanna Madam, to introduce the speaker to our members.
Good evening. CA Sandeep Das Garu is a fellow chartered accountant, AICPA and CIA, Certified Internal Auditor. At present, he is a partner in Vishwanath Hedge and Company, Chartered Accountants. CA Sandeep Garu specialized in area of risk management, internal audit, external audit, financial and management accounting and reporting. He has diversified experience across various sectors: manufacturing, FMCG, pharmaceutical, power, oil and gas, and hospitality. He has worked extensively in multicultural backgrounds in Abu Dhabi, Saudi Arabia, Canada, Morocco, Ghana, and Australia. He has worked with Deloitte Voltas prior to moving abroad. He has worked with Abu Dhabi National Energy Company in various roles as Senior Internal Auditor and Finance Controller for Power Business. He has handled sensitive investigation audit, due diligence audit, merger and acquisitions. He has worked closely with the audit committee's chief audit executive, chief financial officers. He has worked in several risk management projects where he proactively participated in the development of risk control matrix chart, delegation of authority matrix, review of key organizational policies and procedures. Thank you, sir, and we welcome as a faculty for this today's seminar.
Thank you, madam.
Thank you very much.
Today's faculty, CA Sandeep Das sir, to take over the session.
Yeah, thank you very much. So at the outset, I would like to thank Nellore branch and Tirupati branch for inviting me to speak on the CARO 2020. It's definitely very important topic with the changes it has undergone recently. So today I'll just try to try my best to update you with whatever the latest changes which has happened in the CARO 2020. So as you all know that uh, CARO order is applicable from April 1, 2020. Okay, so the statutory audit that will be held from 2020-21, CARO order will be applicable from then. So recently in the CARO, the changes which has taken place is that earlier there were about 16 clauses. Now there are 21 clauses. So 5 new clauses got added. And in fact, there are sub clauses which are 40. So you can imagine what is the size of disclosure which is expected from the auditors going forward. So the whole idea is to enhance the entire auditing, the reporting requirement for which the management need to provide a lot of information to the auditors to make sure that they are in compliance with the CARO. So let's talk about the applicability and non-applicability of the CARO. Okay, so the CARO, first the non-applicability. It is basically not applicable to sectors like banking companies, insurance companies, Section 8 companies. However, this exemption is also extended to Section 25 companies as well, in view of Section 465 of the Companies Act. And then one person company and the small company as defined under Section 2, subsection 85 of the Companies Act 2013. In case of private companies, okay, there are certain criteria which has been laid out, and there's 3 criteria are the paid up capital reserve and surplus for the company. Okay, if should not be more than 1 crore as on the balance sheet date, and then the company should not have the borrowing, okay, of a certain threshold, and the revenue of 10 crore. Excuse me. Excuse me.
Yes, sir. Please let me, sir.
Yeah.
Your voice is clear, sir.
Yeah, it's fine. It's fine. Yeah. So, so as I mentioned, so you have the paid up capital reserve and surplus not more than 1 crore as of the balance sheet date, and the total borrowings, okay, should not be exceeding 1 crore, and the borrowings is from banks or any financial institutions at any time during the year. So it doesn't basically specify, okay, that the borrowing should be from any other source. So it is very clear the borrowing should be only from banks or financial institutions and at any time during the year, meaning that I might not be having any borrowing as at the balance sheet date, but during the year, yes, I did have the borrowing, which is of the threshold exceeding 1 crore. And then the revenue of 10 crore in the financial year. So here, if the private company, if they comply with these 3 criteria, then they need not comply with the CARO order. Then the compliance is not required. But if they do not satisfy any one of the order, any one of the criteria mentioned here, then it has to comply with the CARO order. Okay. So here, let's look at some of the checkpoints, which we have created just to get a bit more of clarity about the applicability. So here, the first point is whether the order applies to a private limited company which fulfills the threshold limit, but is either a holding or subsidiary public company. Yes, the CARO is applicable because it will be then deemed to be a public company, being a subsidiary of a public company, or whether it is a holding company. Okay, then it will be certainly deemed to be a public company, and in that case, that private limited company cannot be exempted from complying with the CARO order. Then, in case of the foreign company or a project office or license office of a company which is incorporated outside India, yes, they have to comply with the CARO order. Same for the branch audits as well. The branch auditor has the same responsibility as the responsibility of the group auditor. Okay, so the branch auditor has to make sure that he fills out the CARO check, the CARO order, and he complies in fully, okay, without any exception. Then what is the status of the, in case of CAG, the Controller and Auditor General? Do they need to comply with the order? Yes, the order is only supplemental in the direction given by the CAG in respect of government companies. Hence, the order, it forms part of the auditor's report, which is submitted to its members. Now, the key question is period of compliance. So, does the auditor need to report only for the year, the event as during the year, or as at the balance sheet date? Here, the compliance period is throughout the year, throughout the financial cycle. It is not that you're in non-compliance during the year, but as a balance sheet date you're all okay. But still, if there's a non-compliance, it has to be. So what the order look for is the complete accounting year for compliance. So the auditor shall report state of affairs during the accounting year. Order compliance shall be determined with reference to the accounting year as a whole, not position as at the balance sheet date. Now let's look at few of the definitions. So what is paid up capital? It includes equity and preference shares and shares forfeited, but it does not include any unpaid calls and share application money. Then reserve and surplus. So reserve and surplus.
Excuse me, sir, 1 second. Can you please raise the volume a little bit, sir?
Is the volume low?
The volume was a little low. So if you can raise the volume, it would be more effective.
Okay. Yeah, I got it. Yeah. So is it okay now, or it's?
It's okay now, sir.
Hello. Is it okay?
Yes, sir. It's okay.
Yes, sir.
Okay. Thank you. Yeah. So reserve and surplus. So basically, it is basically capital reserve and revenue reserves, which includes revaluation reserve adjusted for debit balance in the P&L account. See, what is capital reserve? Capital reserve is something which is not available for distribution of dividend. Okay. Whereas revenue reserve is something which is other than a capital reserve. Okay. And then the borrowings, as we know, it's a short-term, long-term borrowings, term loans, credit cards, bill discounted, and any borrowings from any scheduled cooperative banks, foreign banks, financial institutions will be considered for the purpose of limit, considering the borrowing. Coming to revenue, revenue is what is disclosed as per Schedule 3 of the Act, which includes both your continue and revenue from your continuing and discontinuing operations. Then financial institutions. So basically, what's a financial institution? It includes any banks, NBFCs. Okay, so like it's a scheduled bank or any other financial institutions as notified under the RBI Act 1934, or financial institutions under Section 45 of the RBI Act 1934. So basically, whether it is an ICICI Bank or Mahindra Finance, which is an NBFC. So those are all just to give an example. So they're all financial institutions. But here, I just want to, for the benefit of the group, want to discuss what is the difference between a bank and an NBFC. So basically, the banks which accepts the deposits. Okay, when coming to NBFCs, they don't accept the demand deposits, and they cannot participate in the payment and settlement systems. And even the insurance which is covered for the bank, okay, for your fixed deposits under DICGC, okay, that is not applicable for an NBFC. So these are just a difference between what's a bank and then NBFC. So what else does then the institutions does? So it means the financial institution means any non-banking institution which carries on its business or part of its business the financing by way of making loans, advances, shares, debentures, securities, or issued by any government or local authority, or letting or delivering any goods to a hire on the hire purchase agreement. So now let's get a bit of an understanding. Okay, what are the new clauses which has been introduced? As I mentioned, earlier there were 16 clauses and now there are 21 clauses. So let's look at what are the new clauses which has been added under CARO 2020. Is the audio clear?
Yes, sir.
Okay. So now the first part, auditor's resignation. I'm sure you must have seen in the recent past, in the last couple of years, a lot of auditors has resigned just at the time of the finalization of accounts before the AGM. So many things happened. Okay. So perhaps given that background, maybe, the MCF felt there is some more stricter norms are required perhaps to fix up on this area. So when an auditor resigns, okay, so it is very essential for the incoming auditor to take few necessary steps. Okay, so what's the first thing? They need to understand the reason or the issues or objections or concern which is raised by an outgoing auditor. So for which it is very essential that the incoming auditor shall speak or shall communicate with the previous auditor to determine what the reason for a change, and the resigned auditors also need to file a form ADT3 with the ROC within 30 days from his date of resignation, and thereby stating the reason for resignation. This is very essential because what has happened in the past, okay, people, the auditors who resigned did not specify, the actual reason for, his or her resignation. It was given like on a personal ground, on a health issue, or prior commitments and all that. But SEBI has come little heavily on that, and SEBI has come up with a format under Annexure A where it is clearly specified that you please mention what is the details for your resignation. Was it that you are unable to obtain sufficient audit evidence due to management's imposed limitations, or you felt that information provided to statutory auditors was not complete or they're inaccurate? Then another area that is loans and advances. See, we have seen, especially in the pandemic situation, the financial institutions are facing a lot of challenges, especially with their loans. And I'm sure you're all aware of the moratorium which has been given just to see that there's some breathing space for the borrower. But however, at some point in time, the bank definitely need to get the money back, whatever is outstanding to them. So there is always an evergreening of loans and advances. So what is an evergreening? It is always the loans are being renewed or extended during the year just to settle the overdues of existing loan. And auditors, for that matter, has to verify the loan agreement. Okay, it is very essential that for any auditor, especially when you're doing when they're looking into the loan part, that you please look into the loan agreement and look at the terms which has been set in the loan agreement. Okay, to ascertain the terms and conditions laid out for renewal of any loans and advances. Okay, and just please see that that there are any dues which has fallen as a balance sheet date, and any especially those dues which is renewed post balance sheet date, but before the auditor report date. Okay, that those needs to be considered before reporting purpose. Okay, so because there are defaults, and we know in India, especially a year before and year before, that there was some loan defaultment issues, NPS issues has come up, and so it is very essential, to see who are the willful defaulters from the financial institutions. But before we get into that, let's understand who is a willful defaulter. He is the one who, the unit which defaulted in meeting payment obligation in spite of having the capacity to repay its debt, and not use the fund for the purpose for which it has applied for, and the funds has been diverted or siphoned off the funds. And I think you must all be aware of recently the fund siphon case which is going on. And so it is very essential for an auditor to examine whether the term loans has been applied for the right purpose for which it has been asked for, and any short-term loan which has been used for a long-term purpose, because there are the cases which has happened in the past that there is an asset liability mismanaged on account of this, where the banks has borrowed for short term but for a lent for a long term, because of which the entire net worth of the bank was almost on the verge of collapsing. And whether did the company borrowed, to service debts of their subsidiaries, the joint ventures, or any of their associates. So what is in the CARO, you will find that there is an tabular format which has been mentioned. Okay, how the auditors should be reporting for any loan defaulted. Then repayment of loans and advances. Okay, so as I just mentioned, it is very essential for auditor to examine the loan agreement to see what the terms has been set out there for repayment of loans. Because if the terms say that the loans are repayable on demand and without specifying any payment or period of payment, and for which if the answer is yes, then the auditor need to understand what is the total aggregate amount of such loan which has been granted to the promoters. Okay, here especially as I mentioned, there could be a siphoning of funds, and this could be one of the possible route that the money could go out. So it's very essential that auditors should obtain all the related parties details from the company, and while performing the duties, make sure that we also compliance with SA 550, that is related parties. And as I already mentioned that, also the auditor should look into the loan agreement to ascertain any payment schedule, especially with the repayment of principal and interest. And therefore, it's very essential the auditor reports what is the gross amount of such loans or advances granted during the year. Coming to the next item, which is income tax transaction not recorded in the books. See, it could so happen that you come across transactions, okay, perhaps which is not there in the books of accounts, but you come across those transactions through the income tax assessment. So, like as the auditor reviews the assessments which has been completed during the year, and you see that there are certain undisclosed income. So these incomes are basically nothing but the income which has been surrendered or been disclosed by the SSE during the year when the income tax assessment had taken place. But however, it is essential for the auditor to obtain, the complete statement which has been prepared at the time of search and survey to determine what is the nature of such income. Okay, because this undisclosed income nature could be anything. It could be jewelry, it could be any valuable items, it could be any articles or things, or it could be anything, say like any transaction within the nature of income, or any allowances which has been availed but not disclosed. So it could be nature of anything, and it need not be only for that year. It could be any of the prior years. So it is very, very essential the auditor must look into all the income tax assessments which has been completed during the year under audit. Okay, but any amount, if it is or any addition if it is disputed by the company, in that case the auditor need not report under this clause. So the clause is very specific that any surrendered or disclosed income, or if you have voluntarily admitted any such income that the company has admitted, but which is not reflected in the books of accounts of the company. So again, as I mentioned, the auditor need to review the tax assessments which is completed post balance sheet date, but prior to audit report date, to see the income surrendered or disclosed related to the year under audit or prior year. So it need not be only for the year, it could relate to a prior year as well. But in the process, it is very essential the auditor should also understand, that whether such a disclosed income could be classified under AS5 or in AS8, because you need to bring it into your books of account just to set it right. Okay, once those items has been disclosed for income tax purpose. The next point is on the whistleblower complaint. So I think you are all aware of what's a whistleblower. And you must all be aware that that the whistleblower is mandatory for any listed companies. Okay, so and it is very essential for the listed companies or even some of the private entities, or whoever has implemented voluntarily the whistleblower mechanism, that there is a whistleblower policy, and the entire the governance mechanism, organizational governance mechanism works on that whistleblower. So here the auditor need to consider whether there are any whistleblower complaints which were received during the year. And as I mentioned, some of the establishment, it's not mandatory to implement the whistleblower mechanism, but for the listed companies, yes. But there are certain criteria being said, mentioned there, like companies which accepts deposits, or companies which has borrowed from financial institutions or bank or 50 crores, then they certainly need to establish, a whistleblower mechanism. On the top of it, SEBI also has listed down requirements for the listed companies to disseminate on their website the details of the vigil mechanism of the whistleblower policy. Auditor, it's very essential, therefore, for the auditor to consider every complaint which has been received during the year, and whether those complaints has been investigated and resolved in a timely manner. I think this is very, very critical. The reason being, like once the whistleblower has put the complaint, okay. So generally, in real scenario, what happens? We see when a whistleblower generally complaints, those complaints are very valid. Therefore, it is very essential that the auditor spends some time understanding the issues, because generally these whistleblower complaints sometimes are investigated by the internal auditors. Okay, because they have a very good understanding of the business, the process, and especially the amount of time they are involved with the business, because the statutory auditor comes only periodically, but the internal auditors, they are there around the clock, especially when the internal audit is an in-house department. Okay, so it is very, very essential that the auditor reviews the entire whistleblower mechanism and see how effective it is, and whether any of the whistleblower complaints, okay, which were raised, which were flagged during the year, has been resolved, or if there are any open items, and see what has happened post balance sheet date as well. So for which auditor also need to review, the minutes of meetings of audit committee and board of directors to identify any whistleblower complaints, if any. So it is basically the auditor just need to corroborate as much as information regarding whistleblower, okay, to see any complaints which has been flagged and been resolved in a very timely manner. Now, we just discussed a few of the the changes or the additions which were made in the CARO 2020. Okay, now let's look at some of the items where there are significant changes in CARO 2020 vis-a-vis 2016. So first one is on a PP&E, that's property, plant and equipment and intangible asset. See, early we are more accustomed with the term fixed assets. Like I'm sure you would all appreciate, when you talk of fixed assets, we are all aware of, how the records has to be maintained, what the record should contain in terms of the asset description, the when supply details, the date of supply, the date of capitalization, okay, the cost, okay, then the depreciation value, the location of the asset, all the details. So we are all aware of it. But what has happened now, this fixed asset has been replaced with PP&E and IA. IA stands for intangible assets. Okay. So another thing is the title deeds of all immovable properties, okay, which are disclosed in the FS are in the name of the company. If not, report all such instance in the tabular format. So it is so except for the lease. So it is very essential that the company reports, okay, all the immovable properties and along with the title deeds, okay, in the FS, to see that they're in the name of the company. And if it is not, especially, it has to be reported with the reason, why it is not forming part of the financial statement. Then the revaluation of fixed assets or the PP&A. So any revaluation of PP has to be done by a registered valuer. Okay, and at the time of valuation, it's essential to indicate what is the amount of change, and if change is 10% or more in the aggregate of the net carrying value of each class of PPI. That means here it is not on a gross basis, but it is for each and every category, the category. So if the change in any category of assets, because we all know the assets has many classes, so like you have the building, you have plant and machinery, you have furnitures, you have computers, okay, so on and so forth. Okay, so it's an asset category wise. If there are any change on account of this revaluation, okay, that needs to be reported. And the revaluation, as we all know, it is done under two approach, either on a cost model or a revaluation model. The revaluation model, it is always on an upward valuation or downward valuation, but on a cost, it is all a downward valuation, because if there are any impairment loss which needs to be accounted for. So in total, that the reporting comes in only if there are any change in the asset value, okay, which is 10% or more for each category of the assets. Then the proceedings are initiated or pending for any holding of any Benami property. Any Benami proceedings initiated against the company for holding any Benami property under Benami transactions. If so, the same has been appropriately disclosed by the company, because what has happened, recently the regulators, they have come across scenarios where, the promoters, they have the assets, they have purchased asset, but the asset is in the name of the some other company or some relatives or somebody. So it is very essential, to understand, okay, who was actually is the owner of the asset. So it is the duty of the auditor, for any to report any proceedings which has been initiated or are pending against the company, and need to make appropriate disclosures with regard to the nature of property, what is the value of such property in companies' books of accounts, okay, and would there be any consequential impact in the financial statements, for which the auditor also need to reevaluate, evaluate whether liability needs to be disclosed under contingent liability. And very, very essential from an auditor standpoint is also to look for the subsequent events for, as mentioned under SA 560, for any proceedings initiated post balance sheet date, but before the signing of the auditor's report. So primarily, the reporting under this clause is more for the adequacy of disclosure in the financial statements. Coming to inventory, as we all know that the physical verification of inventory which is carried out every year, either on a continuous basis or maybe once in a year program. Okay, it depends again on the nature of the industry and the complications that is involved in the process. Okay, if the system is if it's a very complicated process, okay, and where it cannot be done in one go, maybe the management decides to do it in a multiple times periodically. But if it's a very straightforward process of manufacturing, in that case, it is done perhaps once in a year. But however, management has to ensure that in case if it is complicated, at least once in 3 years, they do 100% of the inventory verification, which is must. So the auditor needs to evaluate to see whether the physical verification done is comprehensive enough, whether the verification procedure adopted by management is appropriate and it is done at a reasonable intervals, and any discrepancy beyond 10% or more in value for each class of inventory which is noticed during the verification has been properly dealt in the company books of accounts. And this 10%, when we say, see, as again we know that the inventory had got different class like raw material, your work in progress, your finished goods, and the spares. So for each class, it has to be looked for any discrepancy for each of the category. If it is 10%, then you need to report to those. So this 10% threshold limit, if it applies only after adjusting whatever the excess or shortage for each category of such inventory, and any discrepancy shall be computed only at the time of physical verification. This is very essential to understand that any discrepancies that has been noted has to be adjusted from a material standpoint only for the value. Okay, and it has to be adjusted only at the time when the physical inventory is carried out, and the financial impact for such adjustment needs to be reported in the financial statement. Working capital. So as we know, especially at a time, okay, there are always challenges the company faces with the working capital, managing working capital. Okay, but here it is more from a reporting perspective to see, was the company sanctioned a limit of working capital limit of 5 crores or in excess of 5 crores in aggregate from the banks and financial institutions on the basis of security of current assets. Okay. And so when you say it is in aggregate, okay, not a particular bank or financial, but it is in aggregate from in excess of 5 crores. Okay. And the sanction letters also needs to verify from the the letters which is issued by the banks or by the financial institutions, and reporting under this clause is mandatory irrespective of actual utilization. It might so happen that the sanction limit is more than 5 crores, but perhaps I have not used even 50% of it for whatever the reason be. Okay, but still the companies cannot say that no, I am not going to report, because the order is very clear. If the working capital limit is in excess of 5 crores in aggregate from banks and financial institutions, then the order has to be complied with. So it doesn't matter what is the level of utilization been done. Okay, so actually utilization doesn't matter basically. So but here there's one more catch, that where the sanction limit is less than 5 crores, but due to the levy of interest or due to excess withdrawal, okay, if it exceeds 5 crores, then it's beyond the scope of reporting under this clause. So this is a subtle difference. So that means I have a sanction limit of 5 crore in excess of 5 crores, but I have not utilized it, but still I need to comply with the order. But if I have a sanction limit of less than 5 crores, but because of excess withdrawal or the interest, if it exceeds 5 crore limit, then then still I'm okay, and need not be it's not in the scope of reporting for this under this clause. And for reporting under this clause, both fund and non-fund based credit facilities shall be considered for determining the limit. And the threshold criteria shall be verified for any day during the year and not as at the end of the financial year. As I mentioned you at the very beginning of this session, that it is not the position as at the balance sheet date, but it is the position during the whole accounting cycle, during the whole financial year accounting cycle. So that is very important. So even if for one day, okay, if I have met the threshold criteria, then this order becomes applicable. Then coming to cash loss. Coming to the point of cash loss. So cash loss figure, as you know, how especially the cash flow, we are all aware of how the cash flow is prepared and how does the cash flow looks like, right? So basically cash loss, you don't get the figure right away from the financial statement. Okay, the number doesn't come straight away from the financial. So it is essential for the auditor to understand how the cash flow numbers has been arrived at, for which the auditor needs to look into the preparation of the cash flow. Okay, so here we are not just talking about cash from the operations. We are talking in a cash loss in totality. Okay, so also, but it is very essential that the audit need to understand whether there was a cash flow loss during the financial year or in the immediately preceding financial year, and if so, state the amount. What is the cash flow for the period covered by the audit. So basically, what it says that you cover you report on the cash flow. Okay, for both the years, for the immediately preceding financial year and for the current financial year. But assuming the cash loss is there only in the previous year, then you report separately. So it is basically to understand how the operations are being done, and whether whether really the unit is able to generate cash for the business. So basically what happens, the more there are disclosures, the more there are information in the CARO of this nature, it certainly helps the investors, okay, to understand, okay, how the business is doing, where the business is heading to, especially in case of listed companies, where we all know there are investors and who keenly reads the financials to understand. And this is very essential, and especially today in the pandemic situation, it is very, very, very vital. The reason being, we all know the business has been shut for quite some time, and especially in the last quarter of 1920 and in the first quarter when the business was low, and but gradually it's picking up. So definitely, it is very tough or challenge for the business to maintain a positive cash flow. Okay, so it is very essential for the auditors, to keenly look into these aspects and make sure it is disclosed in a very appropriate manner for better understanding of the performance of the business operations. Okay, so in case if there is restatement of financial statement for previous year, okay, you need to consider Ind AS 8 for losses after tax determined after restatement shall be considered. That means if after considering any previous financial year impact and the restatement of the financial needs to be considered, and the cash flow loss figure shall be adjusted for the effect of any qualification in the to the extent qualifications are quantified. So it is very essential that the auditors should be able to quantify once they qualify. Where the quantification is not possible, then it is then in that case the auditor certainly needs to state that in the report and the reason why it is not quantifiable. Okay, so all in all, the cash flow, as we know, it starts with the net profit or loss after all the required adjustment, especially for the non-cash items like depreciation, deferred tax, forex gain or loss, fair value changes for determination of cash losses, and any expense which is of a contingent nature. It need not be adjusted. Fraud reporting. This is very interesting, as we just we have discussed about whistleblower some time back. It's very pertinent in today's scenario, where there are a lot of things which are happening in the system. Okay, and see, ultimately again it is for the benefit of the investors who has to know what is happening inside the inside the company, and but before that the auditor needs to get hand on to certain things. Okay, so how does the auditor gets all the information? So what is the criteria which has been laid out? So like any fraud which the auditor is being made aware of, he or she has to make sure that they report such fraudulent activities, okay, within 60 days to the central government. Okay, and the threshold is 1 crore or more. So the way it works basically is, when the auditor becomes aware of any fraudulent activity that is taking place in the company, and is being made aware that they have to immediately, and which is the threshold of 1 crore or more, they have to report the matter to the board or audit committee, and the board and audit committee is supposed to reply to the auditor within 45 days along with their reasoning. And we have one receipt of those reply from the board and audit committee. Okay, the auditor shall prepare his report and forward in along with ADT4 form to central government within 15 days from the receipt of that reply. In case if the auditor failed to receive any info or any update or reply from the board or audit committee, in that case, the auditor still needs to forward the report to the central government, okay, along with the form ADT4. But however, it has this is the one clause which has an which has a clause for a fine, which says that failure to comply with the provision with the section 143 subsection 12 provision is punishable with a fine of not less than INR 1 lakh, and which may be extended up to 25 lakh. So I think this itself speaks volume that the government is very strict upon this. So it is very essential for the auditor, okay, to flag any such item and make sure the audit committee is being made aware of, and they did properly report it to the central government within the given time limit. Core investment company. So this is one more area. Okay, what happens is here they are like NBFCs which carries on in a business of acquisition of shares and securities, but there are certain conditions which has been laid out for any CIC, that's for a core investment company. And what are those conditions? Let's look at it. Okay, which holds not less than 90% of its net assets from the investments in equity, preference shares and bond debentures, and which invests in equity share of a group companies and unit of infrastructure investment trust as a sponsor, which constitute not less than 60% of the net assets. So, all in all, it says that the core investment companies, okay, if it has an asset base which is not less than 100 crore, either in individual or in aggregate, and which plans to raise public fund, which needs to get access to public fund, then it is mandatory for them to get a registration with RBI within 3 months time period from the date it becomes a CIC NDSI. So that means it's a particular category. So the moment the CIC fulfills the criteria set for this category, okay, they compulsory need to apply for an RBI certificate of registration, and the time limit given is the 3 months frame. Failing, but there are companies which might fail the definition of CIC, but does not have an asset size of 100 crores, and they do not have any access to public fund. They are the only one which is exempted from the registration based on the conditions laid down by the RBI. So the auditor, what needs to verify here is to see that the CAC get registered at core investment company as per RBI direction, but has not registered. That means the company which is fit to be registered, or which should be registered, and which is not been registered. If the group has more than one CIC, then the auditor shall obtain in writing from the management about the CIC in the group, and which shall include both exempt from registration and the one which is not registered in CIC for the purpose of completeness. Internal audit. I think many of us, we have seen in the past CARO, there is always a clause that the internal audit shall always compensate with the size and nature of business. But the change what I saw in the CARO 2020 is now it is asking for the audit internal auditors report, and it is not asking internal auditors report one report per year. It is asking for the periodical reports. So the ministries or the government is so strict upon this that we just don't want a piece of paper annually. It needs to be periodical, because as we all understand that internal audit is a strong backbone for any good corporate governance. So it is very essential that the statutory auditors obtains the internal auditors report periodically. Especially internal auditors, the statutory auditors need to report on IFC, internal financial control. So it is very essential that they read through the internal audit report thoroughly, understand what are the key issues and how those issues can percolate into would impact the financial statement, okay, and so that financial statement is not misstated. So it is mandatory for all the listed companies, which we all know, but there are certain criteria which has been laid down for the private companies as well, and that is if the turnover is greater than 200 crore during the previous financial year, or if there has been any borrowings from banks or any public institutions which is more than 100 crores. Okay, so it is very essential, for the private companies, okay, which meet this threshold criteria to set up an internal audit department. Now you might ask me, okay, what if my, say, in 1920 I have touched a turnover of 210 crore, okay, so that means that from 2021, okay, you need to have an internal audit function, okay, which could be potentially in-house department. Okay, but there could be a possibility that because of this pandemic situation, where the business is going low and the demands has fallen drastically, okay, your turnover could be less than 200 crores. Now the question comes, do I still need to have an employee? The question is yes. The reason being, in the previous year you have hit the threshold criteria of 200 crores. Okay, so now it is essential that you need to have an internal department. Henceforth, the employee shall continue irrespective of whether you are in the 200 crore threshold or not. The thing. Okay, same with unlisted public companies, okay, which is a paid up share capital of 50 crores during the previous financial year, or borrowings from banks or any financial institutions over 100 crore at any time during the previous year. So you have to keep in mind the word anytime. It is not as at the balance sheet date, but it is only during the year. Now the audit committee, which is the oversight board for the internal audit activities, and as we all know, the internal audit functionally report to the audit committee with audit committee. So basically, the scoping of all the internal audit work, okay, right from the planning stage to carrying out the risk assessment, everything is scoped along with the audit committee. So basically, the chief internal auditor and the audit committee, they work hand in hand, make sure they get all the risk into the risk matrix chart. Okay, and they evaluate those risks, prioritize the risk, and come up with an annual audit plan. Okay, and the statutory auditor has to make sure the audit plan has been duly complied with. Okay, sometimes it might so happen, especially in the Q4 practical I've seen, we might not get the the internal audit report on time. Perhaps when you're doing the audit, the internal audit is also going on simultaneously, but you need to make sure that you get the internal audit report before you close the financial audit for the organization. And again, I suggest that the SS 610, which is the using the work of internal auditor, the auditor need to mandatorily consider this standard. See, we are in compliance with the standards while reporting under this clause. And again, the SEBI, which says that there should be a direct communication between the internal auditor and the audit committee, which I have just spoken. Okay, and the auditor has to make sure that the employed system, it does exist, and not only exist but it also operates very effectively. So what is the word, when you say it functions effectively, means what? In real scenario, we see in the auditor's report for every quarter, and you keep seeing the same observation again and again. So what does it speak? It says that either the management has not fixed it, or perhaps it's not mature enough to be fixed, or there is some kind of a negligency or reluctancy from the management to not so there, the auditor needs to, the statutory auditor needs to speak to the employer to understand, okay, why certain the old issues are still being dragged without addressing them, okay, for better understanding of the entire employment process. And as mentioned, the employment has to be completed as per the audit plan for the year, and the statutory auditor need to also assess what are the impact of the employment findings on the financial statement. Then the next point, which is about company's ability to meet its current liabilities. This is very interesting, especially again in a given situation. Okay, generally, what happens, we see that there could be some element of outstandings, okay, whether in the statutory payouts or the vendor payouts, could be any payment for that matter, especially which is the current liability. The nature is a current liability. We need to check those items, okay, to see those payments has been made post balance sheet date. That meaning that if there are any current liabilities the company has in its book as at 31st March, say 2020, while I'm auditing for 1920, I have to make sure that those payments has been made either in the month of April, May, June, or July. It's a time before I prepare my audit report. The reason being because it talks about the health of the organization. Because as you can see, SA 570 going concern is a very is a significant issue, especially in the today's scenario. If you have recently read in the news, some of the companies, especially in the aviation sector, like one of the airline company, where the auditor has clearly mentioned that the company going concern is in a limbo, is in a dilemma because the net worth is completely eroded. Okay, however, the management has their own justifications, but the auditor prima facie, based on their evaluation of the or based on the examination of or verification of the subsequent payments post balance sheet date, feels that the company perhaps is not in a position to meet all their payout obligations. Okay, so basically, as we all know, the current life, so going concern gets impacted when the company fails or find a challenge. It's challenging to make their payouts in the 12 months period, because see, current liabilities, we all know that this is what an obligation has to be met in the next 12 months. Okay, so we as in 31st March 2020, the company should be able to meet all its obligation by 31st March 2021. If the company is finding it difficult, okay, to make the payouts to meet its financial liabilities, the current liabilities, then definitely going concern is one aspect that needs to be looked in very closely, and accordingly shall be reported by the auditor. So for which it is very essential the auditor verify the subsequent payment status as on the audit report date for those liabilities which is there in the books of accounts as of 31st March. And the auditor also should see that whether the management is aware of any material uncertainties relating to any events or conditions, which definitely gives him a significant doubt about entity's ability to continue as a going concern. Okay, and so it is very essential that the auditor discloses if any such uncertainties exist, as I quoted in my example, that in one of the aviation sector, why definitely auditors is doubting the going concern of that company. CSR compliances. So As we all know, under Section 135, certain guidelines has been, so certain criteria has been put in, okay, whereby it says who needs to be in compliant with the CSR, and who need to have so one of the criteria is that company with a net worth of 500 crore or more, or the turnover of 1,000 crores, or a company which has got in the 3 preceding financial year the profit, so they have to 2% of the average net profit they need to provide for the CSR purpose. So basically, the money needs to be spent for other than ongoing projects and the ongoing projects. Okay, so so here the recently which has been mentioned that whatever the unspent money which is there, it is expected from the company that the company is going to spend those money for the CSR purpose. If it is not spent for other than ongoing projects, such fund shall be transferred to a fund within 6 months from the expiry of financial year. If the financial year expires on 31st March 2020, so 6 months means it's September, by which it has to be transferred to a fund which has been identified, which is also a requirement under Schedule 7 of the Companies Act. And there it is, the responsibility is on the board to state the report, in the report, the reason for not spending the amount unless it's for an ongoing project. So they need to give a reasoning why the money has not been spent, and all the money that is being spent should be in accordance with the CSR guidelines which is given by the company. Okay, coming to ongoing projects, the difference here between the ongoing projects and other than ongoing projects is that if any fund, any money which is not spent within 30 days, it can be transferred to a special account, and that special account is been termed as an unspent CSR or unspent corporate social responsibility account, and which an auditor needs to obtain any information from the management for all the activities it has undertaken. I am sure you must be aware that recently there has been an amendment in the Schedule 7 a couple of days ago, whereby it says that any spending by the company on the projects which has been taken by central or state government, which is funded by central or state government for R&D R&D purpose, for scientific purpose, for drugs, for vaccination. Okay, so that will be allowed. So basically any contribution which is made by the company on this project, which is linked to drugs, vaccination, medical equipment, R&D, okay, those will all be considered as in CSR project for the 3 financial year, starting from financial year 2020, 21, 21, 22, 22, 23. This is a very recent amendment. And the auditor also should see that any provision which needs to also to be made, okay, as on the balance sheet date as required under AS 29 or Ind AS 37 for any CSS spent. Then companies in consolidation. So here it's basically says that auditor need to comment whether there has been any qualification on or any adverse remarks by any component auditor of the company included in CFS in a consolidated financial statement. So basically what, when an audit of an unit or a component is done by an auditor, okay, it is expected that if anything, if he or she has any qualification or any adverse remarks, okay, those are put into the report, and okay, and that is also communicated to the principal auditor, ultimately who is responsible for the entire group audit. So basically we can call them as a group auditor. So here the response to CARO are to a very specific questions. It's either affirmative or negative. So if there are any adverse comments, any qualifications, okay, by a component auditor, okay, it is mandatory that they communicate it to the principal auditor, and the principal auditor there has to use his or her judgment, okay, for the purpose of including those comments from the component auditor. But in reality, sometimes we see that, especially when you are doing an unlisted company, as we all know, the unlisted companies has got 6 months time to conduct AGM from the end of the financial year. So it might so happen that, the component auditor or the unit auditor, okay, might not have finalized his audit report, okay. So in that case, he needs to report, okay, to the principal auditors his his findings, and the principal auditor, okay, should also state that in his report he has stating which unit and what is the issue, okay, in his CARO report, and also mention that the CARO report of that component has still not been issued. Here, the materiality concept doesn't is prevalent while reporting under CARO, because it's assumed that the item reported in the material by the component is material in nature. So it is expected. So the principal auditor did not go back to the component auditor checking whether it's a material enough, because it is assumed that when an item has been reported by the component auditor, it is material enough to be brought into the notice of the members or to the stakeholders, okay, and accordingly it will be included in the auditor's report. So I think largely we are done with whatever the changes that has happened, okay, and under the various clauses, especially in the last 10 clauses. And anyway, we have seen what are the new 5 clauses which has been added. Here, I would like to emphasize on audit documentation. I feel, the auditor does do a lot of work, okay, but the thing is, sometimes where we fail is if we don't document things, adequately with the proper, backups. Because I still remember, when I joined my internship, okay, articleship, okay, I used to wonder what these checklists are for. Is it just for yes, no? And especially when I started my articleship, it was just the time, CARO was phasing out. So in a lighter manner, I told to one of my senior colleague that time, you just CARO. This CARO I cannot, because this, what is it I'm going to do with this? Just to say yes or no and just index, cross index. But over a period of time, as I matured, as I understood things, as I've started understanding, appreciating, the value of documentation and how key is the documentation. Because I think most of the time where we fail is if we don't document things. Especially, I am the one who personally believe, even when you go and meet to the client, okay, always carry a piece of notebook and a pen and make sure what has been discussed, it is documented, minuted, and also also shared with the client, so that we know that we are all on the same page. So tomorrow there is no difference. So I think audit documentation is very, very essential, and each and every number has to be fact based. We cannot pull the number out of thin air. Make sure each and every number, it's 1 + 1 2. So we cannot just say, okay, this number has come from somewhere. It doesn't happen. So it is very essential while preparing our work papers. We plan ahead. Okay. Say is we prepare when we go to meet the client to get some information. Make sure we go with a set of questionnaire. We have our questions upfront. Okay, when you meet for any client interview, please make sure that you go on time. You go well prepared with all your question. You ask a very pointed question, and you get a pointed and the right response as well. So we need to be very specific. We need to specific in our communication while speaking to client. Okay, and when you're trying to inquire, okay, something, don't jump onto the conclusion right away. So give some time, give some thought to it. Okay, perhaps if you have one question, but if you spend some time deliberating on that matter, you might come up with a 5 to 6 question or perhaps more. So it is very, very essential that we build up audit documentation. We have very systematic approach. Okay. While addressing, whether it's CARO or even our regular audit work, especially, when we're doing some analysis, make sure, all the data points are available. But before you accept any data point from the client, make sure the data are complete. Sometimes it so happens the client gives us data which is incomplete, or some transactions could be missing, because as we work sometimes on the ERP platform, okay, the data that doesn't run full cycle, and you might see that some data are missing. So it's very, very essential that the minute you get the data, make sure you first mention the date you have received the information, because that is very critical, where we face some challenges at times with the client. The client said, I've given you on so and so date, but if you don't keep tab on those dates, we lose track of it. And again, client sends one more data. So you please make sure that, whatever we have the version control, so that especially it happens in the closing phase of the audit, where the TB undergoes changes, the financials under, the balance sheet, P&L undergoes changes, and we get lost in that. So it's very essential that we are pakka on the audit documentation, we maintain the version controls, we have a set of checklists, we have a questionnaire in place before we go and meet with the client. Every number is indexed, cross-indexed, cross-referred, and wherever we need more explanation from the client, please make sure that, we get the response from the client, and please visit those responses, whether they are valid. If you're not satisfied with the responses, again, try to explain to the client why do you think that there are missing links. Please speak to them and try to get a response that would give you a satisfaction. So now, what else for the company to know about the CARO? So as we see in the silent features, for new reporting requirements would definitely lead to an increase in the scope of work. So I think you got some element of clarity that, this needs a voluminous work where the scope has been extended, especially now we have got 40 clauses. So definitely it needs a lot of work to be done. And it is not only for the auditor, for the business as well, because business needs to make sure that they provide you with adequate information. The CFO needs to see that the team supplies the required and valid and relevant information, but because any failure with the disclosures would be regarded as non-compliance and now need to be explicitly stated by the auditor in the audit report. So with that, I think we come to the end. Yeah, so yeah, this is my favorite quote. When learning is purposeful, creativity blossoms. When creativity blossoms, thinking emanates. When thinking emanates, knowledge is fully lit. When knowledge is lit, economy flourishes. Thank you.
Hello.
Yeah.
Sir, you are audible.
Yeah.
Is it audible, sir?
Yes, sir, you are audible.
Yeah. I have one small query.
Yes.
If I pledge the shares of my parent company, should I report in this? I have shares of my, I have taken borrowings and I have pledged the shares of the parent company. Should I report in this? It will come in this reporting?
If you have pledged shares against the borrowing, definitely that needs to be reported.
Dear members, our chief guest MP Vijay Kumar sir has also joined with us. He's already in live now. Sir, MPV sir, welcome you for
welcome, sir.
Webinar, sir.
Good evening, Mansi Krishna.
Welcome, sir. Good evening, sir.
Good evening to all.
Yeah.
Sir, this is a joint webinar. Nellore and Tirupati branch, both of us were doing this webinar, sir. We welcome on behalf of both the branches for today's webinar, sir. Thank you.
You please continue the Q&A session, or you
Yes.
want me to speak now? Either way.
One second, sir. Members, if you are having any queries, you can switch on your mic, and you can raise your questions, so that our faculty, in the presence of our chief guest, he will clarify our doubts. Or else you can forward the query to the secretaries of both the branches. Even then the secretaries will raise the questions. Sir, one of our member has asked a question that a resignated auditor has to submit ADT3 to ROC. But in the current procedure, is this form to be filed by the company only? In this situation, what is the role of the resignated auditor? Thank you.
So the designated auditor has to, so it is the responsibility of the success auditor to see that the designated auditor has filed the form, ADT3.
Okay, yeah. So ADT form has to be filed by the designated auditor or the company, sir?
Fine. Designated auditor.
Okay, it has to be filed by the designated auditor. Yeah.
Yeah.
Arun?
Sir. So what is the deemed deposits under this Companies Act?
Arun, can you repeat your question?
Sir. What are the deemed deposits for this, including in CARO?
What are the deemed deposits?
Yes, sir. Deemed deposits.
Yeah. So so there, as you know, there are different type of deposits. Okay, like demand deposit, time deposits. Okay, so there are different deposits. So anything which is which we are depositing with the institution, the banks or Nvfcs, okay, could be deemed deposits.
I think my name is Venugopalam. I think if we receive any advance from our customers, and if you don't supply the materials or services against that during within period of 1 year, and that amount may be considered as deemed deposit. What I guess.
Right? That is the nature of an advance. Okay, that is the nature of an advance. Say for example, you have deposit is generally what the deposit, something which you take as an part of an agreement. Okay, but here it is more of a like like you have to supply goods to a customer. Okay, so the customer has paid you an advance money. Okay, because generally what happens when it's a deposit, there's an element of interest which kicks in, but in case of an advance, it is only against a purchase order or a contract that you take money as it is contractual, and you keep the advance against the supply. Once the material is supplied, then it is squared off against the invoice as and when it is raised.
Correct, but I will take the advance. I will not supply the material for long.
No, that is because that's generally how do you classify deposits? How do you show in your balance sheet? Because this advance is in a nature of it's a liability, right? It is okay, which you need to comply. So the question is, can I call it as a current liability? Okay, because you need to supply the material, right? So in that case, it's the more of the nature is a liability, right? So there you need to oblige the customer by supplying. So when you're talking about deposit, it's completely different, because when you're talking about deposit, it is a money which has been accepted from a party with an understanding that there will be an element of an interest payout which will happen at some point in time. But I don't think this will be the right fit. As you mentioned, you can call it as a deposit. That's my view.
Okay, thank you.
Sir, Sandeep though, sir, I am not going to just follow.
Yeah.
Yeah, I have one doubt on physical verification of inventory.
Sandeep.
Yes, sir.
Yeah, with your permission, I'm Vijay Kumar here. With
Sir,
your permission.
good to see you, sir. Good to see you, sir.
Same here. With your permission, just for the benefit of the previous member who asked the question on deemed deposit, I would request the member to go through the guidance note of CARO, where we have explained the term deemed deposit. It is relating to para clause 3.5. It's defined in the CARO. I think if my memory serves me right, it's covered as part of question number 55 or something. It is clarified there what constitutes deemed deposits.
Okay, thank you, sir.
Okay, sir. Thank you, sir.
In case of, I have one doubt on this physical verification of inventory. So, is it audited to report 10% or more discrepancy? Is it the year end of the physical verification, or if a company has undergone 4 times on every quarterly basis? So, what is the basis to report?
So basically, the reporting. You see, when you are doing a valuation, it is done generally at an year end. Okay, so it is the way it's perceived that it is done at the year end for each category of the inventory, as I mentioned, for raw material, for WIP, or for FG or spares. So it is done for each category at an year end, and as and when it is done, okay, any movement and which is over say 10%. So if it is a 10 lakh is the valuation we have currently in the books, but if it is say 15 lakhs, then it needs to be considered for the for the purpose of the disclosure. And
So, meant to say, on a cumulative basis also, do we need to check?
on it?
On a cumulative basis as well.
So,
It's like, for example,
yeah.
Like if a company has undergone 4 times in a year physical verification on every quarterly basis. So every time a company has discrepancies for the physical verification, like 5% or 2% on each time.
Yeah.
But on a basis, it was 10%.
So basically, the way the order says, you do it at a year end based on the discrepancy, whatever is there, you do it at an year end. It doesn't say
year end only.
Doing it, year end only. But if you are doing it on periodically, and if you see there's a discrepancy, and you can adjust in the books of accounts, as and when it is done, because there's also said that as and when you carry out the physical inventory, you do it. So it can be done either whether you do it at the year end or as and when you do periodically in the quarterly, you can adjust in your books.
So what are the things to be mentioned when in case of a resignation of a statutory auditor?
What are the
things to be mentioned in case of resignation of statutory auditor?
See, when a statutory auditor resigns, it is very essential they mention the reason why they have resigned. As I said, earlier what was to happen, the reasons were very vague, like, it is they used to say it's a personal issues or some prior occupational things, health issues. So the SEBI has made it very clear that you need to specify the reason why you are. So it is, so in case, say for example, if an auditor is resigning for non-obtaining sufficient audit evidence, or they come across a situation post balance sheet date where they're unable to express true and fair view, so they need to express and explicitly the reason, okay, giving out what is making them to resign from the company.
So we have to get this information from the retiring auditor?
Yes, they have to, in their resignation, they have to clearly state, with facts that why they are resigning from the position of a statutory auditor.
Okay.
Arun?
Yes, sir.
Can you start with the introduction of our chief guest?
Thank you, sir. I think there are no further questions. I request our branch vice chairman, CA Sujit, to introduce our chief guest, CAMP, which will be gathering.
Good evening, one and all. First of all, I would like to congratulate the speaker on an excellent delivery on the subject of CARO 2020. The PPT was well presented and well designed in easy to understand manner. And today is my birthday, and I take it as a birthday present to introduce my guru, CA Vijay Kumar Garu, Central Council member, to all the participants in the seminar. He is a chairman for Accounting Standards Board for the year 2019-21. He acted as chairman for the Valuation Standards Board and Digital Accounting and Assurance Board. He is the vice chairman for Expert Advisory Committee and acted as vice chairman for Financial Review Reporting Board and also the Committee on Accounting Standards for local bodies. He is a nominee member for SAFA Committee on Accounting Standards Board, and in past also he was a nominee member for National Financial Reporting Authority, Quality Review Board, SEBI Committee on Disclosures and Accounting Standards. He is a member of Auditing and Assurance Standard Board, Board of Studies, Corporate Laws and Corporate Governance Committee, Ethical Standards Board, Internal Audit Standards Board, Internal Affairs Committee, Research Committee, Management Committee, Executive Committee. He is also a member of IFRS Advisory Council and a member of SMEIG. He is the present CFO of SIFI, and he also was the partner for Yoganand and Ram LLP Chartered Accountants from the year 1999 to 2007, and from 1992 to 1999, he was the head investment banking and company secretary for Sundaram Finance. He is the present director of XBRL India Limited, SIFI Singapore Pte Limited, Tejo Engineering Limited, Sella India Software Services Private Limited, and he was also the former director of National Internet Exchange of India. He has been awarded as one of the 100 most influential CFOs in India by CIMA, and the top 100, and is one of the top 100 Roll of Honor. And he has also received the National Award for Contribution to Financial Accounting by the Capital Foundation Society. He is an associate member of Confederation of Indian Industry, the Institute of Internal Auditors, Life Fellow member of the Institute of Directors, member Board of Studies ICT Academy, member Regional Council, and he has acted as a resource person for professionals for accounting standards, IFRS, auditing standards, code of ethics, corporate law, governance, and capital markets. And as we all know, he has acted as a teacher for over 20 years in the subject of accounting, financial reporting, and corporate law. And he has published various books, authored various books, which we all have read. With this, I would like to introduce CAMP Vijay Kumar Garu to the gathering. Thank you.
Thank you.
అందరి తరపున నీకు పుట్టినరోజు శుభాకాంక్షలు. God bless.
Thank you, sir.
So, Vamsi, shall I?
Sir, you can proceed, sir.
Yes.
So, good evening to all, and on behalf of the Nellore and Tirupati branch, sincere thanks, Sandeep, for taking your time for the wonderful presentation. I heard you for the last 15-16 minutes since you were at the topic of CSR. It was a pleasure listening to you, and the way you clarified the queries, very happy to listen. Thanks for your time for the members of the branch. My sincere thanks to the chairman and the managing committee members of both Nellore and Tirupati branch, senior members of the branch, past chairman and managing committee members, and fellow professionals. Hearty good evening to all of you, and I trust all of you are safe, and I pray for the good health of everyone. I'd just like to share some thoughts to begin with on CARO. I should compliment both of you for having, both the branches, for having, and particularly the participants, for having taken the initiative to have a program on CARO 2020 at this juncture when you are actually finalizing the financial statements of 1920, for which this CARO is not applicable. That speaks volumes about the fact that you are serious about equipping the members ahead of time. And I've been telling everywhere, irrespective of the size of the branch, that on CARO 2020, at least 4 or 5 programs should be done during the current year 2021, so that auditors can advise their clients on the implications of CARO 2020 on the reporting. And even for auditors, I'm sure Sandeep would have highlighted clauses like the stock to tally with the books of account. I don't know how people are going to do, but that's the reality. That's the reality now. So we know how books of accounts, many companies have challenges in preparing, and to give a confirmation that they are tallying with books of account is not going to be easy. And if you are going to sit next July, August and think of how last year, June, last year, September, the company has given stock statement and how it tallies with books of account is just impracticable. So I'm very, very thankful, really very thankful to both of you and all the members who have taken time to listen to this topic today, that you are recognizing the importance of this. And I would urge you to do at least another 3 programs over the next 3-4 months on the same topic, given the kind of difficulties which are there in implementation of the standard. I saw one of the members talking about deemed deposit. I recall in Auditation Standard Board, we had a huge amount of discussion on the term, because the language which is there in CARO versus the language which is there in Companies Act, many cases are not syncing. And there are some challenges like that. So it's good that those kind of issues are discussed. I strongly recommend both auditor and auditee to apply CARO 2020 to financial year 1920 audit report. It is not applicable. It is not applicable, but do a dry run. Do a dry run. Assuming this CARO was applicable for 1920, how would the CARO look like? And discuss with the promoters, board of directors, management, whatever be the size of company. It's applicable for all companies above 1 crore. I'm sure all of you are dealing with companies of that size and turnover about 10 crores. All the criteria I'm sure Sandeep has taken you through. I'm sure everyone has clients in that profile. So do a dry run and identify where you are getting stuck. Tell the client that these are areas which are very sensitive. Let them take needful steps so that 2021, when you have to give the CARO, you will be in a better position to issue the same and it will not be a surprise to the audit, to the client. As far as this CARO is concerned, from the erstwhile CARO of 2016, 1 clause has got deleted. 7 have been retained as it is. 7 with changes. The 5 which have been newly introduced and 2 which have been withdrawn, which was there in 2003 CARO, have come in. So totally about 21 clauses are there, but considering sub-clauses, it's actually 47. So it looks like 21, but you are actually reporting on almost 47 points. What is most important to recognize, and I would request you to look at this from a positive connotation, that it is a development in support of the audit fraternity and even for the auditee. This particular part of audit reporting is bridging the expectation gap. We've all been discussing about expectation gap for the last several years. While we are required to do something, the external world, including regulators, expect something else. So this CARO 2020 is telling very explicitly what the regulator is expecting, what MCA is expecting, like a renewed focus on going concern. We all, any case, report on going concern, but there is that emphasis here that you repeat that. Similarly, we all have reliance on internal audit, which is there. You are required to comment whether the internal audit observations have been addressed. So all of those which are in the minds of MCA, based on their experience of investigations across different companies across the country, all that expectation which was there is now listed down in this CARO 2020. It is onerous. Onerous is actually a mild word. Unfortunately, I don't have a bigger word. It is onerous on the auditors particularly to report on many of these clauses. Some of them are quite impracticable. From the Audit Assurance Standard Board point of view, we have spent a lot of time in developing guidance, and I can share with you, having spent all of the time on developing guidance, we still believe that when you actually implement some of these new clauses, it will be quite challenging till the experience matures on this. So please take precautionary steps and prepare for the same. This particular CARO 2020 recognizes the changing needs of business to ensure better compliance and governance. And we have to look at this from the point of view of that the government is placing more trust on the auditors for better governance. So they believe if at all somebody can help better governance, it's only auditors. So if auditors can report on these aspects, it will help them to ensure good governance. They will use their own IT tools to identify all the negative observations and monitor those companies, send notices to those companies over a period of time. And also please note, despite the fact that it is onerous, it is a very powerful tool in the hands of auditors to express an opinion. There are several matters on which we were not expressively mentioning it in the report. All those points are going to get now reported as part of this query list in CARO 2020. So once again, compliments to all of you for having gone through this session on CARO 20. Let me use this opportunity to share some thoughts relating to financial reporting, considering the pandemic which is there now and the challenges we as practicing members particularly are going through in doing the audits. Despite our challenges of doing the audits, I just want to highlight a few important points. Point one, audit is a responsibility towards the nation, given the fact that the requirement of audit comes through law. Law brought in by Parliament, and it is for the country. So despite whatever challenges are there, it's important to complete the audit and express an opinion. If we do not do the audits and do it more so on a timely basis, in some way, each of us will be contributing to increased financial risk, increased risk on the financial system, banking system. So in this kind of a pandemic situation, assume small entities who have borrowed money, 2 crore, 5 crore, 10 crore, 20 crores, whatever be the money. They've all borrowed money, and banks have lent money on the strength of financial statements. And if the updated financial statements are not there with the banks, and if those financial statements, where applicable, have not been tested for impairment, you will have a situation where management has some insights, bank does not have that view, and for the banks, the risk on those advances keeps increasing. Interest may get paid, installment get paid, they may get rotated between funds, between different liabilities. But the impact of the pandemic is so much that suddenly the entity could fold up and the banks could run into a huge kind of non-performing asset situation, and that is public money. That is public money. So we need to understand that it's important we give financial statements on a timely basis, despite all the challenges which we are going through. I know it's difficult, but probably this is an opportunity for all of us to see what kind of digitalization practices we can follow, and within the existing audit standards, there is enough guidance to address situations like this on how to draw comfort on various aspects. In fact, places like Tirupati, Nellore, if we can develop a good practice of doing audit through digital mode, and if you can perfect that practice, for tomorrow your clients can be any part of the country and any part of the world for that matter. You might be aware from Government of India, there are 12 sectors which have focus for exports. One of the 12 is accounting services. Accounting includes compliance services and audit as well. So the next 10-15 years, and I know there are many young members, for all of them, the opportunity to address is not just the geography in which you are located. It's not just the 100, 200 square kilometers where you are, but it's much, much bigger. And with digital, the opportunity to scale is that much higher. And at the cost of repetition, I just want to highlight a few things. During the last 4-5 months, I have been under tremendous pressure in terms of diluting standards. If there is a time when standards are most important, it is now. It is now. When things are growing and they're positive, some aberrations here and there does not matter. But when things are not going well, those situations, hygiene is extremely important. I'll give a very simple example. Let's assume life was normal. I've just returned home. I'm so hungry. I could probably eat whatever food is there on the table without washing my hand in a normal situation. But in situations like this, I need to be extremely disciplined to wash my hands and only then eat. The same is true here as well. And unless the financial position is correctly reflected, the banks will not be able to give the necessary support, and banks understand these are difficult times. What they expect is true financial statements. And if someone wants to raise capital, whether it is from friend circle or private equity or otherwise, good financial statement that this is the performance, this is the extent of damage due to the pandemic, the person will understand and contribute. So that is extremely important. And I keep always saying that accounting, the financial reporting which we do is communication.
Hello.
Can I request
జగదీష్ కృష్ణ గారు మీ మైక్ మ్యూట్ లో పెట్టుకోవాలి సార్.
Yeah. So as far as the financial reporting is concerned, it is communication, and accounting means being accountable. And just like individually, you and I always expect anyone communicating with us to give us complete communication and truthful communication. The financial reporting is a communication. Has to be only complete and truthful. In these times, the small medium enterprises are highly susceptible for survival. We are aware that the GDP will contract by at least 10%, which means 30 lakh crore is the kind of impact. We saw a country like US, the GDP is down by 32%. UK is 20% down. Global supply chain has been severely impacted. In this situation, it is quite likely many businesses will get impacted. And we have to exercise very high caution on revenue recognition, deferred tax assets carried in balance sheet review, and impairment provisioning, and importantly, going concern. On going concern, I would like to highlight something, and I would like to share this particularly for young members in practice. Please don't get me wrong. I am taking the liberty because I am interested in you. Because I'm interested in you, I'm taking the liberty. I'd leave this word of advice for the younger members. My career, this is the fourth downturn I'm seeing. Fourth downturn. But in the earlier 3 downturns, I never had situations of reviewing a going concern. This is the first occasion where the going concern assessment in many organizations has become a reality. And the insolvency cases, we've all seen that more than 70% haircut has been taken by the bankers. What it means is, for all those entities where there is 70% haircut by secured creditors and 0 money for operational creditors, the going concern issue already existed, but the auditors of those entities across all IBC cases have prepared financial statements on going concern assumption being valid. Regulators will take strong action going forward because banks have lost money. Bank losing money means public like you and me losing money. When banks pay us interest rate of 5 as against 6 or 7, it's because that 1% or 2% which belongs to us, they are using it for bearing all these bad debts. Going concern assessment is not easy. It's extremely tough. It requires a good understanding of global trade, Indian economy, the industry in which the entity is operating, and your own business, your own client business. All of this needs to fall in place. That level of understanding is required for going concern. My request, wherever there are indicators of going concern query, please do not hesitate to reach out senior members. Senior members should have experienced over time, and they'll be in a better position to list down the right type of questions which will help you to in turn engage with the clients. Going concern is so fundamental to organization, and you will notice that even small entities, trading business 5 crore turnover, jewelry shop, furniture shop, trading business, these businesses, March 20 you will sign now, and because that business is not doing well, the person probably is in his age of 55, 60, children are probably in US, he may decide that I'm done, I will close down the shop, I am done. So I signed thinking it is going concern, but this gentleman had something else in his mind. Or the pandemic impact is so much in terms of rental and other borrowings which he has taken, difficulty in collecting receivables, some wholesale business and all. He might be forced to lift his hand sometime in November, December, January after you have signed the financial statements. So please exercise very high level of caution while assessing going concern and have your working paper strong. The other observation in general I would like to make is something very fundamental to audit. In all situations where the economy contracts or is going down, the fraud risk automatically increases. So when people have employment, etc., things move and the fraud risk is relatively less. But now, when employments are at stake, small suppliers are suffering, the fraud risk will increase in terms of inappropriate invoices, etc. Some of us must be concurrent auditors of banks and all. So all kinds of mischief is possible in an environment like this. We need to be more careful about increased fraud risk in situations like this. It is stress on us because we ourselves, our own individual practice is challenged, but in terms of workload, we need to catch up more. So we have to ensure that we are not compromising and we are not missing out in detection of some of this fraud risk which should have normally detected. For the financial year 1920 audits, which most of you must be concluding now, private limited companies, unlisted companies, I just have a word of input. Even if it is a private limited company, unlisted company, please exercise the authority which audit standards are given to you. And that's the beauty of audit standards over the last 10 years. SA 706 and SA 701. 706 is applicable for all clients, all entities, emphasis of matter and other matters. So if in your audit opinion you would like to emphasize something or draw attention to other matters, please don't hesitate in drawing attention. And 2 years back, we have this SA 701 on key audit matters. And just a little nostalgic, this SA 701 was finalized in Tirupati. We had the Audit Assurance Standard Board meeting in Tirupati 2 years back. And the standard was actually finalized in that hotel down. I don't remember the name of the hotel, but it was finalized there. And this standard is applicable only for listed companies, it's mandatory. But for all others, private companies and other unlisted companies, auditors are at liberty to use SA 701 and report key audit matters. I would encourage, if the audit client, 10 crore turnover, 30 crore turnover, 50 crore turnover, if there are some areas where you have spent extra time, performed additional procedures to satisfy yourself, you put it in the key audit matter that this was an important audit matter on which I have spent time. This is how I performed the work and this is how I satisfied myself. It will be extremely helpful to you and user of financial statements as well. In fact, in the WIRC, Western India Regional Council of ICI, there's a nice publication on key audit matters. It's called Anthology on Key Audit Matters, where for all listed companies, they have analyzed key audit matters and given it so beautifully. So in respect of your clients, if stock is a major issue, receivables is a major issue, impairment is a major issue, or construction contracts percentage of completion a certain major issue, don't hesitate to use this. It's not negative. Key audit matter is not negative. It only tells, in my assessment, this is an important matter. I spent additional time. I did additional procedures. This is how I convinced myself. So it actually enhances confidence of user in the financial statement. So that's an important standard. Please use this power which is available to you. And on audit standards and even on accounting standards, in the digital learning hub, for every standard, there's a 20-minute video. I would encourage that you make your audit staff, particularly audit students, to go through those 20-minute videos and you keep a track. It is these audit staff who will actually do the first level of audit work. And if they're aware of these standards, the quality of their work will increase. So please make them go through it. It will also help them for their exams as well. The performance of work as per audit standards is the best professional indemnity insurance one can have. And I would encourage that for all the work, you keep a track of the same. So thank you all for your patient listening. My sincere thanks for the invite to be with all of you today. Best wishes, stay safe and stay accountable.
Thank you, sir.
Thank you, sir.
Thank you, sir. Thank you very much. I request the members who have any doubts regarding financial reporting or accounting standards can ask N.P. Vijaykumar, sir.
Vijaykumar sir, this is Chanmastan.
Chinna,
Unnanu. Thank you for joining, sir. Thank you so much.
In fact, thankful to you for the opportunity to be here. Full credit to you. Thanks, Chanmastan.
Great. మేము అందరం మా స్కూల్ కి, ఎస్పెషల్లీ నెల్లూరు తిరుపతి స్కూల్ కి ప్రధాన ఉపాధ్యాయులు వచ్చారని ఫీల్ అయ్యాం.
Oh my God.
Yes, sir. Yes, sir.
Thank you, sir.
Vijay Kumar garu, good evening.
Namaskaram.
Chandramouli sir.
Evaru maatladutunnaru?
Chandramouli sir.
Chandramouli sir, past chairman sir.
Cheppandi Chandramouli garu, please.
Sir, బాగున్నారా? చాలా రోజుల తర్వాత చూసాం సార్.
చాలా సంతోషం.
కాదు, చాలా రోజుల తర్వాత పర్సనల్ గా విజువల్ గా చూసాము అంటున్నాను. ఎందుకంటే అటెన్షన్ టు సీ పర్సనల్లీ.
మీరు అలాగే వీడియో ఆన్ చేస్తే మిమ్మల్ని చూసినట్టు ఉంటుంది.
అదే సార్, కాదు మీరు చెప్పినట్టు నెల్లూరు తిరుపతి మెంబర్స్ ని ఒకసారి ఫిజికల్ గా అందరూ మీరు ఒక వ్యూలో చూసేయండి. సో దట్ ఇట్ విల్ హావ్ ద రిమెంబరెన్స్ ఆఫ్ సర్టన్ ప్లేసెస్ అట్లీస్ట్.
సరే
having the association with.
Correct. లేదండి, in fact I've enjoyed interaction with the members. I still recall my visits to both the branches. Extremely knowledgeable people. Very happy. And ఆ గ్రూప్స్ లో కూడా ఊర్లోంచి మెంబర్స్ పోస్ట్లు వేస్తుంటారు. వెరీ అడ్వాన్స్ సబ్జెక్ట్స్ డిస్కస్ చేస్తుంటారు యాక్చువల్గా. ఇన్ఫాక్ట్ ది ఎవిడెన్స్ ఇస్ యాక్చువల్లీ ది క్వాలిటీ ఆఫ్ క్వశ్చన్స్ విచ్ వర్ పుట్ టు సందీప్. The quality of, I'm sure Sandeep will acknowledge that the quality of questions were pretty good questions.
Exactly.
That reflects the interest of the members and the knowledge of the members in the profession.
Yes, sir.
చంద్రబాబు గారు కనిపిస్తున్నారండి.
సార్ అందుకే సార్ మీరు వీడియో ఆన్ చేయమని బట్టి ఆన్ చేశాను సార్.
నాకు మిమ్మల్ని చూసిన అవకాశం ఉంటుంది కదా.
అదే సార్, అందుకే సార్ మామూలుగా అయితే వీడియో గానీ వాయిస్ గానీ ఎవరు ఆన్ చేయడం లేదు. స్పెసిఫిక్ గా మీకు మాట్లాడినప్పుడే మాత్రమే చేస్తున్నాం.
సరే సార్, మంచిదండి.
డిస్టర్బెన్స్ ఫర్ అదర్స్.
డిస్టర్బెన్స్ ఏముందండి, వీఆర్ ఆల్ సోషల్ పీపుల్ యాక్చువల్లీ. సో చూస్తే కొద్దిగా, ఇన్ఫాక్ట్ మెనీ పీపుల్ ఈ మీటింగ్స్ లోని వీడియో ఆఫ్ చేస్తారు. కానీ ఇప్పుడు మాట్లాడుతున్నప్పుడు స్పీకర్ కి మనుషులు చూస్తే కొంచెం ఇంక్రీజ్ చేయడం, డిక్రీజ్ చేయడం, ఆ ఫేస్ రియాక్షన్ బట్టి మళ్ళీ చెప్పాలా చెప్పకూడదా అవన్నీ ఉంటాయి యాక్చువల్ గా. సో ఇట్ యాక్చువల్లీ హెల్ప్స్. అఫ్ కోర్స్ బ్యాండ్ కన్స్టెంట్ ఉంటే ఆఫ్ చేసుకోవాలి. బట్ అదర్స్ చూస్తే కొంచెం సంతోషం. మనుషులు చూసారు, చిన్న మస్తాన్ని చూసారు, నా మొహం వెళ్ళిపోయి చూసారా మీరు?
అందుకని సార్ కాదు
మీరు గమనించలేదో వాడిని చూడగానే మొహం వెలిగింది.
విజయ్ కుమార్ గారు మీరు చిన్న మొత్తాన్ని చూసి యువర్ ఫేస్ ఈస్ గ్లోయింగ్, దెన్ ఐ ఇమ్మీడియట్లీ కాల్డ్. బేసింగ్ ఆన్ దట్ యువర్ అబ్జర్వేషన్ I given my talk.
Sorry, we are speaking in local language.
No, that's fine. I can follow bits and pieces.
It is such a sweet language. You know, in fact, compared to somebody like Chinnamasthan who is from Hyderabad, I can always claim that my Telugu is far better. He will tell he is from Nellore, but still my accent is better than his accent. It's nice. That's such a sweet language it is.
Yeah. Actually, I can follow in bits and pieces.
Okay. No, it was disrespectful that we spoke in local language.
No, perfectly fine. Actually, I'm more joyful, you know.
So kind of you to say that. So kind of you to say
that. Sir, ఒక చిన్న ఇష్యూ సార్, జస్ట్ అంటే సర్టిఫికేట్ కోసం ఇండియన్ అకౌంటింగ్ స్టాండర్డ్స్ ఉంది కదా, అది ఫ్రీక్వెంట్ గా ఉంటే బాగుంటుంది అని నా ఒపీనియన్.
సార్ చేద్దాం. ఇప్పుడు మళ్ళీ బ్యాచెస్ అనౌన్స్ చేసామండి. కొద్ది ఫ్యాకల్టీ దొరకడం కష్టంగా ఉందండి. అంటే ఫ్యాకల్టీ ఆల్సో హావ్ టు టీచ్ ఫ్రమ్ హోమ్. అంటే ఈ వీడియోలో 2 hours టీచింగ్ అంతా కష్టపడుతున్నారు అందరూ. 2 hours అలాగా స్క్రీన్ చూసి మాట్లాడాలి కదా. సో ఇట్స్ లిటిల్ డిఫికల్ట్. ఫ్యాకల్టీ ఆర్ ఆల్సో ఫైండింగ్ డిఫికల్ట్. బట్ చేద్దామండి, తప్పకుండా చేద్దాం. నో ప్రాబ్లం. విల్ డూ ఇట్.
విజయ్ కుమార్ గారు ఒక చిన్న సజెషన్ సార్.
సార్ చెప్పండి సార్.
Small mobile places lo banks are insisting to sign the provisionals and estimations and projections.
అర్థమైపోయింది.
అది మేము మా బ్రాంచెస్ తరఫున మీ దృష్టికి తీసుకొస్తే మీరు రిజర్వ్ బ్యాంక్ తీసుకెళ్లడమా లేకపోతే అన్ని బ్యాంక్స్ కి సర్క్యులేట్ చేయడమా అనేది బాగుంటుందేమో.
లేదు, ఇంకా ఏం అక్కర్లేదు. మేబీ ఫ్రమ్ ది బ్రాంచ్ యూ కెన్ రైట్ టు PDC and put a copy to me, but I want to tell you it is already in the action of PDC. PDC is writing to Reserve Bank of India to advise all the member banks not to do this because of provisional gani, projected financial statements gani. And also we are trying to build some guidance on how to address that. Like projected financial statements ki, there's a audit standard available on how to do it. So daniki soon you will expect something. Soon vastundandi.
Sir, ఇప్పుడు మనోహర్ గారు కూడా ఆర్బీఐ కమిటీలో ఉన్నారు కాబట్టి ఒక లెటర్ ఆయనకి ఫార్వర్డ్ చేసేస్తే ఇట్ విల్ మోర్ కంఫర్టబుల్ అనిపించింది సార్.
తప్పకుండా.
నేను మా బ్రాంచ్ వంశీతో డిస్కస్ చేసి విల్ పుట్ లెటర్ ఫ్రమ్ నెల్లూరు బ్రాంచ్ ఇట్ సెల్ఫ్ అండ్ తిరుపతి బ్రాంచ్ ఇట్ సెల్ఫ్ సో దట్ ఇట్ విల్ బి స్టార్ట్ ఫ్రమ్ మఫ్జల్ ఏరియాస్ హౌ ద క్వశ్చన్స్ ఆర్ కమింగ్.
Sure.
And it won't have the problem for 2021 internal auditors or statutory auditors or some other branch manager who is insisting and make the default statements without available auditor or some UDA numbers without making all the nuisances who will come out with issues.
Tappagunda permission sir.
Thank you sir.
Sir, I have an just a thought. It is, see, like we have standard formats, whether it's a CARO or even for the statutory auditors for reporting purpose. And now since internal audit is getting a lot of action and that's the backbone for any good corporate governance, so would it be possible to have a standard or internal audit report format so that the reporting is a consistency? Would that?
Okay, just for your information, Sandeep, in the internal audits in 2017 we started drafting a fresh set of standards for internal audit. The earlier standards, there were about 18 standards, but we found them inadequate. Given the fact that new Companies Act specifically has some provisions relating to internal audit, much more than the earlier Companies Act, we have started drafting internal audit standards. So far, we have completed work on 20 standards, and we have completed another 10 more.
Sati sir.
One of those standards deal with the reporting part. How the reporting template should be there. So it's in progress. Similarly, I'm also happy to share with you, unlike accounting standards, auditing standards, which we largely imported, internal audit standards we are doing in our institute. We are now doing the forensic accounting standards. We are working on that. Maybe by January, at least few standards will get released. And valuation standards, we've already issued about 8 standards in the past. So these are all original from the institute, which is the contribution actually to the rest of the world as well. So internal audit is happening. It will come anytime soon.
Yeah, because I feel way forward, I think internal audit has got a larger role to play.
Appreciate.
Sir, one of our member has forwarded a question. He just wants you to brief the applicability of auditing standards on tax audit, sir.
It is applicable, 100% applicable.
Yeah.
Even accounting standards are applicable. And the guidance note on tax audit says that. I don't know page number, but guidance note on tax audit says that as well.
Vamsi, and that I think Tirupati chairman also is available. Fix a one program for this auditing standards applicable for the individual and partnership firms. We'll conduct the one program, 2 hours or 3 hours program, so that the members will get that good knowledge on the, especially including tax audits and the corporates and partnerships signing up balance sheets and notes on that.
Okay, sir. Definitely, sir. I will speak with the Tirupati branch chairman, sir, and we will arrange a program on that, sir.
Okay.
Namaskar garu.
Sir, Guru garu.
Good evening, sir.
Good evening.
ఇప్పుడు నెల్లూరు బ్రాంచ్ తిరుపతి బ్రాంచ్ లో మేజర్ గా ఉండేటి రైస్ మిల్స్ కాంట్రాక్టర్స్ బిజినెస్ పీపుల్ ఆఫ్ ద ట్రేడింగ్ అండ్ నాన్ ట్రేడింగ్ అండ్ గోల్డ్ ఈ 4 ఆస్పెక్ట్స్ ని దృష్టిలో పెట్టుకొని కానీ గైడెన్స్ నోట్ కానీ మనం డిస్కస్ చేస్తే
షూర్ సార్
చాలా ఉపయోగంగా ఉంటుందని నా ఉద్దేశం.
షూర్ సార్, ఎస్పెషల్లీ ఆ స్పెసిఫిక్ పాయింట్స్ తోనే నేను స్పీకర్ తో డిస్కస్ చేసి ఫిక్స్ చేస్తాం.
ఏమవుతుందంటే ఈవెన్ అడ్వాన్స్ గా క్వశ్చన్స్ రైజ్ చేసుకొని ఆ క్వశ్చన్ కి ఏ విధంగా మనం ఆన్సర్ చేస్తే అవర్ అండ్ ఇట్ ఈస్ ఇలీగల్లీ బౌండబుల్.
షూర్ సార్, గుడ్ సజెషన్, నో డౌట్. Right.
Actually, I would give one step forward, Chandramouli Garu. See, at these branches, you know some specific industries where there is guidance required. You can prepare a 30-page document, 50-page document. It will not have the institute head office seal, but as a branch, you can get a publication, small. You can't call it publication, but suitable nomenclature. Make it available in your branch website. Others could have questions. So that way, the branch will also, over time, get a national visibility. Like మీరు చెప్పినట్టు rice mill accounting and audit issues or tax audit issues. ఒక 40 పేజీలు 50 పేజీలు చేశారనుకోండి, రైస్ మిల్ వేరే చోట్ల కూడా ఉన్నాయి కదా, దే విల్ ఆల్ రీచ్ అవుట్ యువర్ వెబ్సైట్. కొద్దిగా సంవత్సరానికి ఒక పబ్లికేషన్ చేస్తే 10 సంవత్సరాలు తిరగక ముందు వెనక్కి చూస్తే 10 మంచి పుస్తకాలు ఉంటాయి.
వెరీ గుడ్ సజెషన్ సార్, వెరీ గుడ్ సజెషన్. ఇఫ్ దిస్ సజెషన్ ఈస్ ఇంప్లిమెంటెడ్ బై అవర్ 130 బ్రాంచెస్, ఇట్ ఈస్ మోర్ హెల్ప్ఫుల్ ఫర్ ఆల్ ది మెంబర్స్ ఆఫ్ ది ఎంటైర్ వరల్డ్.
కరెక్ట్. లేదు, మంచిదండి. ఇట్స్ ఇన్ఫాక్ట్ మన స్ట్రెంగ్త్ ఇస్ యాక్చువల్లీ ది మెంబర్షిప్ అక్రాస్. మనం లీవరేజ్ చేయట్లేదు, మనం ఇవి యాక్చువల్లీ కీప్ పుషింగ్, వీఆర్ నాట్ టేకింగ్. మన బ్రాంచెస్ నుంచి పైకి తీసుకురావాలి, నాలెడ్జ్ అంతా పైకి తీసుకురావాలి. ఇప్పుడు బ్రాంచెస్ లో ఉన్నంత నాలెడ్జ్ ఎక్కడ ఉండదండి. ఒక చిన్న ఎగ్జాంపుల్ చెప్తాను. ట్యాక్స్ ఆడిట్ ఉంది కదా, మీకు ట్యాక్స్ ఆడిట్ ఈ ఊళ్ళో చేస్తారు కదా, వాళ్ళకు ఉన్నంత డెప్త్ ఆఫ్ నాలెడ్జ్ ఎక్కడ ఉండదు. అది బికాస్ దే ఆర్ డూయింగ్ ద డే ఇన్ డే అవుట్ ప్లానింగ్, కమా, ఫుల్ స్టాప్, సెమీకోలన్ అన్ని ఇంటర్ప్రిట్ చేసి ఇలా చేసి అంత నాలెడ్జ్ ఉంది. So there is so much of reverse flow which can actually happen. That should become the strength of that is the IP of the institute. అది రావాలి. అది మెల్లగా మొదలెడదాం. ఒకటి మొదలెడితే మళ్ళీ అలా 2, నెక్స్ట్ చైర్మన్ వచ్చేసరికి పోయిన వంశీ ఒకటి చేసే కదా నేను 2 చేస్తాను అంటాడు, నెక్స్ట్ 2 చేశాడని ముందు చేస్తాను, అలా కొద్దిగా అలా వస్తుంది అది.
Sir, in Nellore, nearly some 200 rice mills were there, sir.
Okay.
What is happening is when custom milling was being given by the government, we are getting milling charges. In addition to the milling charges that we receive in the form of money, we are getting the byproducts which were waste for the government, bran, husk, some other items we are getting. And these items were being sold by the rice mills and they are getting out of that. So at the end of the March, maybe some items may be lying in the rice mill premises. So whether we have to account for the, whether we have to show it as a milling charges income for relating all these items, or we have to just receive the, record the gross receipt when we sold.
I can't offhand answer, Vamsi. I think you have to share with me how the scheme operates, including whether it will be a government grant or how is it part of the pricing. If you want to send a mail, I'll spend time on that. I'll let you know.
Definitely, sir.
Offhand reply just
okay.
Let me know. There must be some scheme or something must be there, no?
Yes, sir. Some scheme document was there, but for custom milling, they will charge 15 rupees per quintal. And for the byproducts, the rice miller is eligible to take all the byproducts and he can sell it in the open market. Okay. When we are recording those byproducts in our books of accounts, the question is whether we can record those before selling itself. Because
I think you can, on the face of it, you can recognize as inventory before you sell. But let me see it. Let me not rush to it. Let me understand the scheme.
Definitely, sir. I will forward those concerned documents to you, sir. Arun, I think we can close the session with.
Okay, sir. Thank you. Now I request Tirupati Branch Secretary CSC Narsimulu sir to present the vote of thanks.
Sir, thank you, sir, for giving this opportunity. Sir, am I audible, sir?
Yes.
Yes, sir. Thank you, sir. Thank you, sir. It's my privilege to have been asked to propose a vote of thanks on this occasion, sir. I, CA Narasimha, on behalf of Nellore and Tirupati branches of SARC, extend a hearty vote of thanks. I thank Nellore branch chairman CA Vamshi Krishna Garu and Tirupati branch chairman CA Sudarshan Naidu Garu and other committee members of both the branches for well planned to jointly organize this webinar on CARO. I thank the chief guest, Central Council member CA MP Vijay Kumar Garu for being with us for this webinar in spite of his busy schedule. I further extend thanks to today's chief guest of honor, Southern India Regional Council member and ex-FO member to Nellore branch, CA Chinnamastan Garu, for being part of this webinar. Especially thanks today's speaker, CA Sandeep Das Garu from Kolkata, for his efforts and valuable contribution in enlightening us on the CARO 2020. I thank our most valuable members for attending this webinar and for their continuous support to the branch activities. I thank the staff of both the branches for their work and support for this webinar. Thank you one and all. Thank you very much.
Thank you. And
thank you members for your wonderful participation. Thank you very much.
Sujit Nadalkande, after the lockdown, etc. goes, he has to host a party for all of you.
Yes. Thank you. Thank you all.
Thank you,
sir.